So today we are here to talk about the overlap of the fine art market and the cryptocurrency and blockchain economy. Last year, the art market was estimated to be close to $64 billion in sales. And that's according to data that was compiled by UBS and Art Basel. That number includes the highest price ever paid for a painting, and that was Leonardo da Vinci's Salvator Mundi, which sold for $450 million. But much of the art market was on sales for works that happened a little more recently than Da Vinci. 27% were in modern art, and 42% in sales were in post-war and contemporary pieces. So that factor is going to be important in tonight's discussion, since a few contemporary artists are still alive, making new things every day. Courtroom sketches and things happening as we speak. Yeah. So while the art market was $64 billion in 2017, the market cap for the entire cryptocurrency market last year was close to $374 billion. And so about like a third, 40% was Bitcoin alone. Okay, so that's not bad for an industry that did not exist 9 years ago.
Have there been any efforts to crowdfund acquisitions and projects with crypto? And if so, what were they and how did they go?
Yeah. That's probably the space I'm most interested in, most excited about, because now as a single collector you have the opportunity to own a small piece or fraction of a very important artwork. And I think that's probably something that will mostly disrupt the art world in a way, and if we want to talk about disrupting, but I think it's a great option for collectors all over the world to own a piece of artwork and not just see it on Instagram, but really have ownership in it in any shape or form, and then be able to trade it just like we would trade a share with and then reinvest it into other works, and and I think that's a space that will continue to grow as well, and it's something that I'm most excited about for sure.
So we mentioned fractional ownership and similarity to owning shares. You've written and you know a lot about fractional ownership. Can you just talk about what that is? Kind of give a quick overview of how that works when it comes to a physical work of art that actually hangs on a wall somewhere. How can you own pieces of it for its tokenization, etc.?
Yeah, so I think all of us know that fine art has this peculiar nature where if you take scissors to a Cezanne, the value plummets. Whereas other forms of creative labor, people have figured out forms of IP that work for multiples. So authors receive royalties, musicians receive royalties. There are many ways of kind of splitting equity. So one of the ways that people try to deal with this in the arts is through resale royalties, or in Europe, droit de suite. The famous story is that in 1958, Robert Rauschenberg sold a painting for $900. So he got half of that. And then the painting resold at auction in 1873 for $85,000, and he got none of that. So I started looking at this and I started saying, hey, resale royalties are property rights under the Coase theorem. They're securities, they can trade anytime. And then I started to look at the specifics of the regulation proposed in the US, and it exists in California, but has been litigated, proposed at the federal level here, and then implemented in Europe, but in ways that I think are not kind of logical as a property right, but function as a tax. And so I've been doing some, I'm sorry for my voice. I'm an optimist because I feel like it's going to come back in the next sentence. So the idea is how you would do that privately. So what if artists could retain equity in their work in the primary market instead of relying on governments? For example, in the EU, the highest rate was 12,500 euros, and if there are multiple intermediaries, there are not treaties that cause someone not to have to continue to pay that amount. There's no concept of a cost basis. So I did a paper, I've written about this in a few papers, the most recent of which I collaborated with Roman Kreisel, the art finance professor in Luxembourg, and I found some of the early sales data for Jasper Johns and Robert Rauschenberg from the Leo Castelli Gallery. And you have to imagine like cursive handwritten notebook pages. And we isolated the works that had matching auction results and found that if Johns and Rauschenberg had decided to forego 10% of the price of the artwork and just taken 40% instead of 50% and carried that as an investment, they would have outperformed the US equities market by between 2 and 986 times, which is an implied annual return of 20 to 40% every year from 1958 until 2005. They're obviously famous artists. Even if that's the ceiling, I think it's an important conversation in which artists have business knowledge and autonomy to decide to financialize in this way. And blockchain makes it kind of, at least theoretically, kind of uniquely possible.
So the idea of an artist being able to collect royalties, as it were, on any subsequent resale, that's something that blockchain makes much more easy than ever before because of its application to provenance. Can you talk about how that works exactly? Provenance?
Yeah, so there are multiple ways that this could work in practice. There are some companies, and I'm thinking of Monograph, which was founded by Kevin McCoy and a group of other people, where they allow digital native art to be placed on the blockchain and then licensed digitally. I'm kind of fascinated with the kind of idea of property rights and just simply an artist listing a work on the blockchain. So again, this is the artist-centric view of the art market. And I find that a lot of things actually make sense from an artist's point of view that then have secondary ramifications for collectors that are important and advantageous. But if an artist issues a work on the blockchain, they can set up in a number of ways, some of them on a pure Bitcoin kind of blockchain that are just property right models, and some that are smart contract models on an Ethereum blockchain, so that there are structures where the title doesn't transfer until a fractional payment is made. And so the contract, the fractional equity contract, is kind of inculcated in the digital representation of the work itself. And I think this pulls the overall art market into the way it currently is transacted for artists like Saul Lewitinn or Felix Gonzalez-Torres, where the work does not transfer without a certificate of authenticity. So I think it raises very interesting questions about the relationship between the physical object and the financial entity of the artwork. Am I fully answering your question?
Yeah. Do you find that there's a challenge establishing with digital works? It's one thing; they're already digital, so it's a nascent native medium. So it's very easy to record on the blockchain. To make the gap, the air gap between the physical work and blockchain. What are you seeing as challenges and some of the solutions? I mean, I know some people are putting QR codes in the back of the frame so they can record it. I mean, is that sufficient? What are your thoughts on this?
So there are a number of different strategies people have used to try to link the physical object to its digital blockchain identity. Some people have used QR codes, some people have used chips. I know people who've looked at lens technology because all physical objects have a kind of fingerprint to them. I think you can also go in the direction where the physical object is always linked to a certificate of authenticity. Then there's a fraud issue in many cases. You mentioned provenance, and I think this is the kind of chain of ownership in the arts and why we understand many artworks to be valuable. I'd like to think that the technology for linking the physical object to the blockchain will develop over time. And to me, the lens stuff is the most exciting because the other tools can be placed on and off of an artwork. And if you can find something that's actually part of the artwork itself. But I think this is an important question. To me, if there are ways that we can think of it again from the artist's point of view and allow the artist to figure out how their work enters a market and make those decisions, I think that can also be clarifying for how we track the object, because they can know best how they want that to happen.
when we're talking about fractional ownership, I mean, you can have thousands of people that own a piece of a work. What are the challenges as far as addressing the kind of practical matters of storage and where it should be exhibited? I mean, one of the big selling points is that by owning a fraction of this piece, you have a voting right to determine its, how it's handled, where it's displayed, etc. Also, there's the issue of the distribution, majority owners versus the artist owner, etc. What are you foreseeing there? And I'll let you know it's the last question. The rest of your voice.
Yeah, no, for sure. I mean, I think a lot of people who are approaching this from the collector side look at an entire artwork that's already trading in the secondary market, and they think about fractional ownership of that entire artwork. This is the model that Maecenas is following, for example, and they tokenize the entire artwork, and you can definitely do that. I'm starting from a point of view of looking at newly issued artwork, and so it's a minority interest, it's 10%, and the artist owns the 10%, and then they can resell a portion of that to have market-driven patronage, and as you say, to allow diversification of exposure to art. I so far imagine the physical artwork having to be wrapped up in insurance if it's securitized beyond 10%, or maybe even still. So I think there are important questions of who pays the carrying costs. There are important questions of appraisal and marking to market, because no one has any idea what an artwork is worth. I don't believe anyone if they tell you that. They know what it should be priced at. They don't know what it's worth. So I think that there will be really important questions that are contract questions. And then there are also extremely important risk management questions, like not even just if the 10% goes to zero, but I'm sort of fascinated by asset value truncation if works are donated to museums, because then the value goes to a third, and it goes to the tax rate. So I think that it'll be about insurance and it'll be about contracts. But I think these are all the right questions to raise, that I don't think that they're impediments that mean we shouldn't do it. I just think they're impediments that mean we haven't yet figured out how to do it.
So one thing I want to know is, from the artist's perspective or from the collector's perspective, what would actually happen?
Absolutely. So when I hear that question, I think about process, right? Essentially, the question is grounded in this nature of crowdfunding, and that's where it starts with. But we're at the very kind of sexy intersection of crowdfunding for a real-world piece of property, a real-world asset, and that's what fine art represents in this capacity. And so, if we're thinking about it that way, are we talking about property in its organic form, or are we talking about a security? Because those are two very different things, and the crowdfunding process to do so is in and of itself different in terms of like what platforms and where those entities will exist in their organic form. And so we're all familiar in many cases the notion of Kickstarter and Indiegogo, people that crowdfund different types of business ventures, whether they be artistic or creating some type of product or whatnot. And so you can have multiple people that are contributing to a certain project, but in many cases they're being compensated for their contributions in very ancillary rewards. But what if there is crowdfunding and issuance that takes place and there is real-world transfer of ownership of that asset afterwards? That could be part of the process. But if we talk about the idea of securitizing the asset, creating things like insurance, creating things like a regulated entity that wraps this into some kind of package or a portfolio of other pieces of art, and now that is going to exist somewhere, now we're talking about the notion of primary issuance. And so primary issuance takes place in many markets, whether it's real estate, equities, over-the-counter traded instruments. There's a number of regulated securities such as Reg A, Reg D filings that represent these today. But there might be art that's already securitized, and then we'd be talking about something called reissuance in a tokenized form. But in any case, you would need a marketplace to exist past the primary issuance, and that's where we talk about secondary marketplaces. A lot of crypto traders who are very invested in the blockchain space today transact on cryptocurrency exchanges, and those exchanges have varying degrees of liquidity because they're all in many cases very fragmented. And we're not going to go too deep right here on the nature of what that means, but I'll just tell you that there are a number of bid orders and ask orders on any assets that are trading. And the depth of the order book, like how many buyers and sellers and what prices that they want to transact in, will differ from exchange to exchange. So until we get to a place where art exists in a primary issuance capacity and there is a combined secondary market where there are active participants that have these bid and ask orders open on these assets, we're going to exist in a very kind of dubious space as it relates to the securitization of issuance. If we're talking about peer-to-peer transactions for property, that can happen, and there are very healthy markets for peer-to-peer transactions of digital assets today.
So I'm not a securities lawyer, but from all the conversations I've had with my securities lawyers and auditors, I think what we'll see first is the difference, I guess, between a commodity and the security is when you have things like royalties, when you have dividends, when you have voting rights. That's really, I guess, the thin gray line between commodities and securities, where if it has those things, it will be security. So, and securitizing in any asset is a much bigger process because it goes through the SEC and will take several months. So for one piece of art to go through that process, I think we will see securitization much later than we'll see tokenization, because I think just base level piece of ownership of the piece of art just at a point of sale, whatever you make, I think that can already happen the next, probably already is happening right now, but will become a lot more popular in the coming 2 years.
So this nature of alternative assets and securitization of alternative assets, there has to be platforms that enable this. And so one of the companies I'm working with is called the Delaware Board of Trade. They're not Delaware itself as a state, but they're a company. They have an asset exchange for over-the-counter instruments, all blockchain enabled. They're handling right now Reg A, Reg D, and Reg crowdfunding securities offerings in tokenized asset form. I would say that the market, in terms of supporting liquidity and activity for trading, is still in its very early stages. But in the event of a securitized issuance of artwork, a platform like the Delaware Board of Trade, we say DBOT, and it's also called an alternative trading system, ATS, which is an SEC-recognized trading platform, is where some of these will exist. And I do envision a future where there will be lots of ATSs that will do primary issuance of artwork. And as an artist or a collector or whatnot, you would then need to know, one, that these exist, to register and go through the identity verification processes to be a legitimate counterparty that transacts on these platforms, and then go through an issuance process which would go through, I'll say, a normal regulated channel. So maybe that's working with a banker, a merchant bank, an investment group, to go through the securitization process. So now you identify the platform, you know how to go through, I'll say, the regulated securities process to get that issuance listed, and then it's maybe pray that the secondary market will support the asset that you put out there. Because again, the nature of making artwork, which I think many people will say is a generally illiquid instrument, unless you're part and parcel to an auction or a marketplace, that's kind of the process there.
And I was just going to add that if you are a collector and you are in need of certain funds, what you do now is you work with a bank and you get maybe 50% of the value on the artwork as a loan, and then you have to pay an interest. But this is a great option to obviously get liquidity and not lose control, ownership, or having to pay all these high interest.
What changes if an artist retains partial ownership in that work?
Just everyone.
I mean, generally I would say when we tokenize that we actually see increases in prices, because the thing with Bitcoin, for example, you might say, hey, it's trading at $10,000. You don't have to actually pay $10,000 to get one Bitcoin. You can buy 0.001 Bitcoin. And if I pay $10,000 times 0.001, then the market price is 10,000. Meaning if people buy small fractions but at these listed market prices, the price will be a lot higher. Now if you remove those masses and you only have kind of like an over-the-counter trading where you have to buy large quantities, you have to buy the full painting, I think you will have perhaps half to a quarter of the price. I think there can be a lot more when there's a lot of excitement, right? We're talking about, again, let's say the artist dies and there's kind of like a run on the money, so to say, when people say, wow, this is going to be worth so much more money. Then a lot of people, even if they wouldn't be able to afford the whole painting, will throw a certain amount of money, which will then raise the market price. Because basically you have a lot more buying pressure.
Anyone else? Well, sure.
Yeah, I was going to say as well that as an artist, if you, as Amy mentioned earlier, you, for example, you sell a piece for $5,000 and then you don't see the upside down the line, This gives a great option to really involve the artists into the economics and the life cycle of their careers, and then really include them into the process, and then that they don't overpaint in a way, so they don't throw too many paintings on the market, so that you really involve them into the process. So it's really an upside for everybody.
Yeah, I think for the artists it sounds like a fabulous idea, but for the tokenization of the pieces of art, including the companies like Mecenas, what they're doing, I think when I'm speaking to collectors, a lot of them are a little bit reluctant about the idea of breaking up the artwork into many different pieces. So you have to look at the two groups of people now, I guess, collectors and investors. Investors should be fine with that, and they're interested in investing in pieces of art just like stocks, and that's great. But for collectors, it could be quite problematic because collecting is their passion, and they're not necessarily happy to break up the work into multiple pieces and then just having a little part of it.
One thing I would add here is this notion of the velocity of money, and combined with marketing. What we've seen in something called the ICO market, or initial coin offering market, which is largely tied to the creation of new currencies that may or may not have liquidity, may or may not have utility after they're issued. If you could think of a world where art becomes initially issued, and there is a heavy marketing campaign around when that were to occur, and then I'm just going to brainstorm here and think, what if we also created a silent auction that were to happen all at once, where money would be pledged to buy such art, but maybe we're not going after fractional, maybe we're going for complete ownership, and there was a huge marketing effort that took place. We could potentially see a lot of velocity of money going towards that purchase or that acquisition of that piece of art, and it's going to be largely dependent on not necessarily the art itself, although that would be cool if there's strong correlation there, but just on the mere fact that there's a lot of, we like to say, FOMO, or fear of missing out on the purchase of said asset. And so then, theoretically, whoever would have the highest bid or the highest pledge of their cryptocurrency for said asset would be the owner then thereof, and all of the monies would be returned to people that pledged capital. So there are lots of ways to kind of structure this in an exciting way that might make the asset trade above its value. But I think when you get a lot of crowdfunding, direct activity taking place, and you have more liquidity, assets tend to trade at fair market value. And in our world, fair market value is a very interesting question.
And if I can add a little quick, it's a little bit like the futures market, I would say. Yes, a lot of futures traders, they just trade, let's say, coffee, gold, oil, you name it, but you can actually have it be delivered, right? So what that means, if there's, let's say, 100 copies of the same piece of art, and each just gets split into 1,000 tokens, and then if you accumulate 1,000, you could actually have, let's say, the piece of art delivered to you. You can actually, exchange it so that you have the physical piece of art. Those tokens would then be burned. So that way you can have both the tokenization and the ownership for those that really want to hang it on their wall, have it in there, if they feel more secure having it under their control. So you can have the best of both worlds, where all the copies would be the same, so to say. If there's a total coin supply, piece of art times amount of fractions, and then if you collect enough of these tokens or purchase enough, you can have them redeemed to get the actual piece of art.
It's actually a much more poetic question about the value of art and what drives people to own it or invest in it. And I can see how you might be a collector who wants to own the entirety of the work. And I can see how you might be a collector who's comfortable with the artist retaining part of it. And then you might feel uncomfortable with the financialization of it, like it just takes something away. Yeah. It's like being given a gift with a price tag, or part of the enjoyment is not thinking about that layer of it. And those same people might be very sophisticated financially and turn around and buy futures contracts to hedge their art exposure.
So, this kind of ties in, actually, what we were discussing just a second ago was the issue of custody, of course, right? So who would actually get custody of a piece that is sold in fractions? And would that have to be worked out in the initial token sale? Would it be continuous payment? Would it be money held in reserves up front?
with art, as we know, the price of the piece of art would grow with the exhibitions, museum shows, and so on. So now, if this piece of art is located in the third party, there should be some sort of like a fund, if it's we make a comparison with the fund, a manager or some sort of specialist who actually decides if this work is being exhibited, where it's being exhibited, if it gets on loan, and so on. So I think with art, it gets a little bit more complicated with tokenization, just because we need to move it around much more in order to make it work and in order for the price to go up rather than with the other piece of equity.
There are important governance questions to collective ownership, and the image that always pops into my head when I start to think about it is that boat that they let school kids vote on naming, and they named it Boaty McBoatface, which is a wonderful name for a boat, but what if you didn't want Boaty McBoatface painted onto the Saison that you all own together? I think that you're into the same sort of questions that people have about larger crypto governance.
This discussion actually, we touched on it a little bit, and that has to do with volatility. And because we're talking about securitization, we're going to talk about, obviously, investment, and an important trade-off is risk versus reward. The volatility in an asset is a factor in how much, and the returns on the asset is a factor in how much risk you're willing to take. So, this entire panel, do you guys see more volatility or less volatility happening in the art market if things start to get securitized? What will change? And keep in mind things like, we see the situation in the real estate market with REITs. You can argue it's either helped or hurt, or it's just different. So what would happen in art?
Yeah, but it's also in the art market, I think it's always a question of supply. So I'm not sure if supply is actually going to change with the tokenization. There won't be more Monets or Picassos, right? But yeah, totally, it's going to increase the number of people who are now able to become art market investors if they're interested in it.
I agree with Felix that there'll be short-term volatility and long-term stabilization. I think it's actually a fascinating question, because short-term, if you believe that there's anyone who's propping up prices at public auctions, and the speculation is sometimes made about people who have outsized holdings in a certain artist's work, and that artist's work, it technically is an asset-backed security, but art as an asset is so fungible that it's a little bit like an alt currency. So I think it's possible that anything that's been propped up will drop. It's also possible that as more people get involved in art market, the cachet of art as an alternative currency will fall as well. So I think there's a lot that we don't know. And the art market is a $65 billion estimated annual market with roughly a $5 trillion float or number of things for sale. So there's a big gap between those two numbers. So I don't know the supply question or kind of what'll happen.
So on to our next question. So what do you think, in this whole discussion, what do you think will be the biggest obstacle in selling ownership rights in tokenizing? What will be the actual obstacles in the near or short term? I mean, we've talked about it somewhat happening right now, but what do you think is in the way? Regulatory, as we touched a bit. Anything else?
Yeah, I agree, and I think it's very important to think about this new generation of collectors who really don't mind transparency that much and are open to more technological ways to collect and to invest into art. Also, there are very interesting things that are coming up now connected with digital art, I think, that really needs help in terms of provenance and authenticity. and now there are platforms that where digital artists are able to create art and to sell their art. All of that recorded on blockchain, so they can actually get some money for what they do. And also interesting things in crypto collectibles, which is also exciting and also great for the new generation of collectors.
Yeah, I think that's actually some of the most interesting work that's happening. There's a woman named Amy Raymond Cohen who's working on this in LA, and I've been collaborating with her. I started my career in art museums, and I think that blockchain is actually a democratizing tool that's currently being used for financial purposes. I was going to add to the kind of what are the barriers and say general human inertia and ambivalence about change and the unknown. And also people in the arts who have a lot of power that derives from opacity and privately held information.
Is it fair to the artist? Would this ultimately be fair to the artist? What will change with what an artist does? We talked a little bit, potentially the artist's output would be lower because they can get more for individual works, potentially, but are there pitfalls, are there problems that you guys can see happening to the artist? What will change with what the artist makes? Will they be more market friendly? It's not just a question of, make this painting match my furniture. Now it's other things.
Yeah, I would say the same. I think the artist actually will benefit from it the most because it opens up your market and your work globally. Also, it puts you in line, and I think if you have a board of directors or essentially a board that will want your work to grow in value, you will do everything forward as well, and you keep the ownership over time. So I think it's a true win-win.
And also, I think this might lead to a lot more of the outrageous, magnificent art that usually nobody would finance because it's so out there, it's so expensive, and it's hard to find that kind of patron. Like back in the during the Renaissance, the Medici, they paid they patronized so much where they were able to build massive cathedrals, have amazing murals and all that. So I think if we decentralize it, we will be able to raise a lot more of that because people will want to be part of something like this historic, or perhaps maybe even the names engraved somewhere at the bottom where people could then pass those tokens on, so to say, for generations and say, we own part of this piece of history.
I think that the responsibility and all that is to make sure that artists understand business. Because the same way that one has to have a broker-dealer license to operate in markets, I think you would want artists to be autonomous deciders to do this.
Art education. You are a token academic. Token, no pun intended. Can we tokenize you? And Elena, of course, you have the New Arts Academy. What are you seeing in terms of, I guess, the demand? Is it penetrated academia, the topic of blockchain?
I also started my career sort of in arts education. I went from arts education to business school at Guggenheim Museum. I think that there's a ton of conversation in academia about blockchain and art, many conversations, all the time. I think that the conversation I want us to be having that we're not having is about who's included in the conversation about art and the relationship of the art world to the world at large, to creativity, to design, to innovation, to interdisciplinary experimentation, to science. And I really appreciate a part of the art world that is rarefied and esoteric, like Documenta, where you have to read 200 pages of theory to understand every installation. And it's kind of like a basic research of the art world, people who are really grappling with art as a thing or as an idea. But to me, it's a certain type of questions about inclusion, and democratic inclusion that I think we're not yet having.
What is the art market getting wrong about crypto, and what is crypto getting wrong about art?
We're seeing a lot of flashes in the pan of high market volume, a lot of opportunity to liquidate certain assets, get in and out. I think it's going to take time for there to be price stabilization amongst, I'll call it best of breed crypto assets before the crypto community in general wants to start investing and being like more collectors. This is really hypothetical, but that's my particular stance.
I think again from the standpoint of from an artist, I think the problem is you just don't understand the space. It's high fluctuations of value. You can't really buy anything in your mind, so it's not really accepted. As a gallery owner, I think that's a good challenge to have because it's something you can work with. I think it's just the beginning. 5 years from now, I think it's all it's going to be.
Yes, I guess we will see in 5 years what it's going to be like, but still I think that art is a very peculiar type of asset and should be treated in this way, and the way it leaves, the way the price increases or decreases is very, very different from other kinds of assets. So that could be a little bit of an issue with tokenization. To see in 5 years, and I definitely hope so, are more companies that are tracking provenance of the artworks using blockchain. I think that this is super, super important, and that's very important for the price of the works, for the artists, for their markets, and making the art market more transparent. And I think that more and more people understand it, and that's what's really needed.
Last point on that is also, I think in the next 20 years, the bigger macro scale we're looking at here, with the age of automation really coming up, where most people won't have the traditional jobs that we look at right now, about 50% of them will be non-existent by 2030. I think we will have a re-emergence of another renaissance where a lot more people living on universal basic income will really focus on the arts. So I think arts will really come to the forefront in the coming 20 years. So having these kind of structures is it's a must, because you'll have so many more market participants, be they artists, be the gallery owners and so on, where you can't just have physical based auctions, but much rather have global markets where people can participate.
So I think that there's a real thing underneath all of this that has to do with the time horizons of markets. Like when you're saying there are people who are looking for the next speculative bubble and what'll have the 5x or 20x, I think that the blockchain in its ideal form presents an opportunity for a profound shift from value extraction to value creation, and also from short-term quarterly earnings to what I would call a cathedral business, which is the reality that some things of value just take a really long time to make. And I say that from the deepest artist part of myself. But I think that I'm uncomfortable with the idea of universal basic income being part of that utopian story, because that universal basic income is a dream of people who are extracting value from the upper echelons of whatever pyramid the speculation allows. And also, anything I've ever read about those gives people $500 a month, which is reasonable. I think that what we want to do with blockchain, and this is why I think fractional equity is so interesting, is to shift from consumption to investment, and to shift from consumption to hybrid consumption investment models, to reconsider how all of us are paid for creative labor, so we become micro investors in the things that we create. And I think if that happens after the sort of gold run, okay. But for me, I'm a bit more idealistic about the collaborative potential.
It's funny because this is always being thrown at Bitcoin in general, or cryptocurrencies, because people are saying, oh, it's being used for money laundering, it's being used to fund crime and all that kind of stuff. Well, before we had Bitcoin, we used art, we used Rolexes, we used exotic cars. There's always something that doesn't have the proper KYC, AML, standards, know your customer, anti-money laundering. So there will always be a tool, and we're really not going to. In fact, it might actually decrease it. And here's why: because if we keep it, properly on the ledger, when it becomes securitized, and you have to go through, KYC, AML, as an investor, then people actually know who does it belong to, what is the route that this token traded from. So there's less under the table being traded, and of course, if we would tokenize all art, which would be problematic in itself. But regardless, if it was that case, then really you couldn't money launder with art, because there's got to be buy for it.
this is such a hot topic, and we could speak volumes here, but my stance is that if you want to launder money, you can do it today with cryptocurrency, and you can do it without cryptocurrency. And if you want to take extra measures in the digital asset space to move as little as $10,000 or as much as the sky is the limit, there are little obstacles in making that happen. And the technology that underlies those capabilities is only getting better from what we call anonymity protocols. So this is a very dangerous space. We're going to a place, whether we like it or not, and this is very ideological, so I apologize in advance, but the notion of a post-state world, it's very in its early stages, but the crypto community is kind of very early in the nature and selling of this vision, and it's turned on a global marketplace that is pushing for that direction. I'm not saying it's good, I'm just saying it is very possible, and it's already underway. And this is, again, it's not just in assets, it involves data, and that's such a huge piece of this, because at the end of the day, art is in itself data, and I'm sure that the real artists in the room might not like to hear that, but we're taking in sensory stimuli from our eyes, our ears, our sense of taste, touch, and every aspect of that can and will be digitized in some form as data in the future. So I'm not coming here as a Martian, but at the same time, this is very real, and we're in such early stages of this happening.
So the way to launder money in art, so I've read, is to change the valuation a lot and to layer in a bunch of transactions. So you get an appraiser to say it's worth 15 million, and then it's worth 4 million, and then it's worth 8 million. And that stuff, as you point out, will show up on a blockchain, depending on whether the blockchain is permissioned or publicly available in some form. So I think it may dampen current modes of laundering money, which are prevalent in real estate or art in that way, or possible in that way. But I think that one of the things we're talking about and calling money laundering is, to me, just anonymous transfer of money. It's not like actually hiding the source, or and so I think a lot of this gets into the technical details of the protocol of the blockchain itself. I think that we should all leave with a sense of hopeful skepticism, but the kind of skepticism that requires active engagement as opposed to dismissing this as a possible future.
I would just say that every part of life will change with decentralization, whether that's art, energy, government, finance, you name it. So I would really start looking at, how certain aspects of your life will be changing and how you can be on the upside of that rather than on the downside.
I'm going to take your disadvantage and raise you and go last.
I already have like 3 more ideas.
Well, I don't know, 50 years ago we didn't think we were going to pay for things with a plastic card, and I think things are changing now, so I think you gotta have an open mind, you gotta be willing to learn and get the best things and most useful things out of it.
And even that we're having this conversation today, and we have a lot of traditional art market players here and artists, I think it's already changing, it's showing the change in the market, the change in what's going on. So there is definitely hope, I guess. That's what I would go away with.
So I'll leave everyone with this notion of there's a lot of words and a lot of syllables attached to this whole realm of technology, and it can be really intimidating and seemingly overwhelming if you're not a technologist at your core. But I would say don't despair, because I think in 5 years maybe, the word blockchain is not going to be as scary, and it's going to be so prolific throughout a number of the systems and applications that we use that it won't even be a blink of an eye, just like you don't even think of why does your credit card transaction go through. But if I were to leave you with an area to focus on and get more smart on, I would say it revolves around this notion of custody management, and that relates to you having your own digital asset wallet or wallets, and how you maintain a protective stance on that, because the threats of owning digital assets, especially ones that exist on public blockchain, are very great. And in crypto, possession is 10/10 of the law, so all transactions are final. There is no reversibility once a transaction goes through, and being able to protect what you own is critical going forward.
Sir, you have a question?
I do. First of all, from the bottom of my heart, thank you all for attending. I am floating on air up here, not just from sleep deprivation. We all have to move to go forward in New York City and the world for betterment. I applaud that. That was my sense in trying to host this and do it. So thank you for voting with your time and attendance, and in some cases your wallets, for being here. I'm really, really grateful for